morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 23rd September 2020 in the international market. Treasury yields held steady on Tuesday as concerns about new lockdown measures in Europe and a likely delay to a new federal stimulus package continue to weigh on sentiment. Federal Reserve Chairman Jerome Powell testified before the House Financial Services Committee on Tuesday. He said it was important for Congress to deliver more aid to the economy through another round of fiscal stimulus. On the economic data front, existing home sales increased for the third consecutive month in August, rising 2.4% from July. With no major information guiding the market, the US 10-year benchmark was unchanged at 0.68 percentage points. In Eurozone, consumer confidence in the 19 countries sharing the euro rose minus 13.9% this month from minus 14.7% in August. Also, few of the analysts have started revising their GDP forecast upwards for Germany, the Eurozone's biggest economy, to shrink 5.2% this year, a big improvement in its last projection from 6 to 7% drop. But given the new lockdown in Europe, these upward revisions stay valid is yet to be seen. In the crude oil market, we had seen a huge ramp up of oil inventories by China when the crude was at $20. Now, when the crude has touched $40, Chinese imports are slowing down significantly and not expected to increase anytime soon, as global economies are still fighting with COVID-19 infections. Hence, with market moving news, Brent crude is stable at $41.37 per barrel, stands neutral for now, $50 per barrel target in next 3 to 6 months based on the COVID-19 infection scenario. In the currency market, dollar index has breached all his recent resistances and is now trading at 94.14. Our yesterday's target of 93.99 was achieved successfully. Dollar resistance is now seen at 94.20, a close above which can take the dollar to 94.5 levels. USD CNY or Chinese yuan is trading at 680 levels. USD INR or Indian rupee closed yesterday at 73.55 and we expect rupee to breach 73.70 hurdle today. For USD INR, we see 73.40 to 73.70 ranges today, and more likely the rupee will breach 73.70 levels today. In the domestic market, there is a growing consensus in the market that government may not borrow more in the H2 borrowing calendar announcements. Government may like to assess the full year impact of COVID-19 on tax revenues and may hold the additional borrowings till December 2020. H2 borrowing calendar may come on Monday. With this sign of relief, no official announcements though yet. Market was steady yesterday and 577 GS 2030 closed at 601 percentage points. Our advice still remains, even though the growing consensus are there for delayed borrowing, we still prefer to get rid of all your profitable trading positions and tide over this event risk. Let's do the SDL auction analysis for 22nd September 2020. Gujarat Karnataka 10-year SDL at 670. UP 10-year at 674. Assam 10-year at 680. Maharashtra and Karnataka 12 years at 6.78. So the 10-year SDL versus GSEC spreads are now 70 basis points, as we had anticipated a month back when the spread was at 55 basis points. The GSEC SDL spread is likely to be in 70 to 90 basis points for the next few months. We also anticipate SDLs to be above 7% once the GSEC benchmark crosses 615 levels. Reminder, buckle up for tomorrow's 645 GS 2029 OMO and do participate in tomorrow's OMO.